Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, April 18, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Plenty of stuff on the docket. I have a whole list of notes. Wait till you see how the numbers work today from the pre-market, meaning the posting and then the commentary in the pre-market. Wait till you see this. We'll get to that a little bit later. A little housekeeping right out of the chute. Inside the numbers will be off tomorrow. There will be no inside the numbers. The live room will be open and moderated by Jordan. Traders in the live room are already aware. Let's start with a rip-your-face-off rally is coming to a chart/day sooner than later near you. Whether they do it tomorrow or they do it into next week, it's coming. The ideal situation is a flush, early morning flush, a gap down, a reversal later on, and they stick a low. That's what we're looking for. It's coming sooner than later. I'm not saying it has to be an all-time multi-week or multi-month high or low in this case. What I'm saying is you're going to get a rip-your-face-off rally pretty soon. They're still headed to the 20-period moving average, whether they come up short, this is the weekly chart, or they spike it through. Irregardless, that's an area of interest. We'll leave it at that. You're going to find support in and around that area. You can see the trend lines we put on the chart yesterday. There's a gap up here at 497 and change, 21, I believe, and the market can certainly bounce in and around that gap. If it spikes through the gap by a significant amount, these are the numbers below the gap. I don't put trend lines at the gap typically like this. Why is that? Because in this case, these are my numbers. The gap is everybody's number. Everybody knows about the gap. The market will likely, and this happens all the time, we watch it in real time in the live room, and we exit or enter trades accordingly. Watch this. So when there's a trade going on, there's two factions of traders that the trick, trap, fool, and frustrate crew need to screw over when it pertains to gaps. Those looking to exit at a gap, whether it's up or down, meaning a long or short trade, or those looking to enter a trade at the gap. Same thing. Doesn't matter whether it's a short or a long. The market, meaning the trick, trap, fool, and frustrate crew's job is to make as many investors and traders look like fools as much of the time as possible. Therefore, they get a chance to screw two factions of traders so they come up short or they spike it through by a lot, scaring away the buyers at the gap. That only screws one faction of traders. They're always going to screw somebody. You know my numbers on the downside. If they bounce it in front, like starting tomorrow with a gap higher open and they keep going rather than a gap and crap, that what we've been seeing, pre-markets bounce, then by the time the market's open for a couple of minutes, it's already trading lower. The tail of a downtrend. Yes, the market's in a downtrend, but when you look at the weekly chart, this is called a pullback in an uptrend. This is a downtrend. This is a downtrend. Where was our bogey as a refresher? The trend line. That was our bogey. Get below the trend line, she turns bearish, and Irene is creeping upstairs. Now, wait till you see this. This is the early stuff. This is the zero dark 30 stuff. You can read these notes on your own. There's something a little bit more pertinent as we get to about 8:45. Where are they now? Kind of starting to lay out the morning trade or the trades. Now, let's pay attention to this. This is where the rubber meets the road. If you're a trader, if you're an intraday trader, if you're interested in the S&P, if you're interested in someone that knows about the S&P, I like to say I have a relationship with the S&P. I'm helping people in the live room and inside the numbers be successful trading the S&P. Watch this. This is at 8:45 a.m., 45 minutes before the bell rings. We've got a potential sell the rip and a potential buy the dip. Okay, so we may have a double barrel type of situation. What does that mean? two trades. One up, one down, one down, one up. Let's start with the scenario of the higher open. If they get to the zone around 502.95 up to 504.40 sooner than later, there should be overhead resistance and a reaction in the other direction. Now watch this, because there's more than meets the eye. Right of the vertical is today's activity. There's your range, 502.95, up just above 504. They never got to the top end of the range. But wait, there's more. I'll give you a snippet. It's in the notes, but I'll paraphrase everything. We'll do the summary in here. 502.95. When they got there, traders in the live room were told, we could take a short there as long as you're willing to short it higher or take the ride. So when they shorted it there, we were given the base hit by them coming down around 5 points, 5 S&P handles, 50 cents in the SPY, give or take. It was a little more. So we had a base hit. Then after that, we were discussing in the live room, it's a play it against Sam if they go higher into the range. And as they started to creep higher, what we talked about was, hey, look, the next zone is really 504 up to 504.40. This pivot area here, 504 up to 504.40. And that became the secondary short high of day. But wait, there's even more. Now, we also put the risk on the board. In other words, if we're going to get into a trade, we have to know where it's wrong and what the risk is if it's wrong. So we always let traders know about that. And then here's the other thing. But wait, there's even more. Where would the buy the dip occur? With a spike of the low from yesterday, 499.12, and into the zone between 498.90 and 498.25. You got to be joking. For a bounce back in the other direction. The you got to be joking part is at 8:45 in the morning, you lay out high of day zone, low of day zone. Come over to check out the live room. We learn, we educate, we play for keeps. It's a serious group of people. At least if you're there, I expect you to be serious. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. The best buy is down at 498.90 to 498.25, 933, right out of the chute. They can bounce it at the gap. The gap was 499.90, and guess what? We've got something for everybody. I tell you the way it is, and traders do whatever makes them comfortable. If they want to take on additional risk, that's up to them. Sometimes it pays big time dividends. Did we have traders in the live room that rode it all the way up to the resistance zone? The answer is yes, we did. Post it under the video. If you had a successful day today, whether it be on the short side or the long side or both sides or in a stock on the move or the stuff that came up in the live room after the market opened, any of the above, we've got something for everybody. Post it in the comments section under the video. Please help a brother out. People want to hear from people just like them that are having success. They want to hear the truth. If it's not working, tell me the truth under the video. If you can say that this doesn't work, talk about it in the live video or in the comments section under the video. Let's have a discussion. Pause the video, read the notes, go back to the chart, and double check the work. You can see here at 10:56, remember what I said before? 504, give or take, up to 504.40 is the next place of overhead resistance. That was after they pulled back already from the lower number, 502.95, and then they went back up later, so we create a new zone, a higher zone with a new high, another shortable area after we got a base hit. By the way, what do base hits do? They put you in the hall of fame. We take base hit after base hit after base hit, not knowing which ones are going to turn into doubles, triples, home runs, Whopper juniors, whatever you want to call them. Pause the video, read the notes, go back to the chart, and double check the work. Here it is, 12:15. If they're killing it this afternoon, 498.90 to 498.25 is the next zone of support below the low. What more could you be asking for? Here's one that popped up after the opening bell, AA Alcoa, $34. Need I say more? Live room, real-time trade. How about Palantir? We had some traders that enjoy Palantir. 2075 was the number. Nice ride on Palantir today. Again, real time after the opening bell. Stocks on the move today. We're going to take a look at TSM, LVS. The others didn't hit their entry objectives. They're off the board. And just wait. Earnings season is just now starting to get underway. They're going to come fast and furious for the next several weeks. Taiwan Semi. First number they opened below. It was off the board. Next zone is 132.35 down to 131.10, just over a buck. You could see what happened. They came into the numbers, they came into the zone, and they ripped it back up in the other direction. Nice trade on TSM. The numbers work. Not so much on LVS. So here was the situation on LVS. They were hovering and open right above the first number. We had this discussion in the live room today about when they open right around a number in a stock, for example, does that increase the risk? Yes, it does, because you don't know how they're going to open it. With a flood of volume comes in, they can certainly shoot right through it. They can also shoot right up. You don't know, but it definitely increases the risk. And here lies one example where they just dropped it really quick into and below the second and third number zone. They bounced around for a while, then they dripped into the end of the day. So this one we're going to call a dud. Lazy swing trader Automagical Algo System took some profit today on some shorts. We have more outstanding, as well as some longs that when the market has its rip your face off rally, they will participate. 48.16 was the short. First profit target was up here somewhere. We took a base hit, turns it into a risk-free, emotionless trade. Second profit target today, down here at 41.65, 13.5% total. We had some traders with options. They got paid really, really handsomely. Either way, that was a nice short. DraftKings. Now, who wants to short a stock on the rise like this? Well, if you have the numbers, it makes sense. About Texas Instruments, another short trade, entered at 172.35. First profit target was today, 163.67. Lazy swing trader, Automagical Algo System. How does that work? System is loaded up with hundreds of stocks, exchange-traded funds, all kinds of stuff. When a number hits, members get a text alert, an email alert. There's a watch list, so you know what's coming before you get the alert. You know what's coming before the opening bell. You can see the watch list the day before. Yes, it's dynamic based on what's moving in the pre-market, based on earnings in the aftermarket, all that stuff. But all in all, you have the watch list. You know what's coming. You know the numbers to enter a trade. What do you have? You have exits. You have entries. You have stops. You have everything you need from a swing trading perspective. We have an open trade list, a closed trade list, a watch list, a list of do's and don'ts. What's going on over in Camp IWM? How about 192.50? We talked about that long before price got there. They hovered yesterday. They got there today. They spiked it through. They held it. And you can see here in the first candle, the first hourly candle of the day, they came up 10 cents short of 192.50, made another trip down later in the day. On another decline, for example, tomorrow, next number down I have 189.50, put it on a sticky note. What's going on with the folks down at the transportation department? We talked about this in the live room, I believe, yesterday. If they were going to get below 15,000, the next number down is 14.9, not that far. 100 points lower on a $15,000 index is nothing. They still haven't got there, but that is the next number. Below all the moving averages, the trend is your friend. This is bearish. This weekly chart turned very quickly from that bullish box to not so much. On a weekly close, if they give up this breakup candle low that held, that's a big deal. Notwithstanding a bounce back to run a test, however, that promotes lower prices, and I have a price much lower that I'm looking at in the transports based on the weekly close. We'll talk about it next week. Simply, it's about 500 points lower, give or take. But we'll talk about the number next week. What about the Q people? Here's something interesting. So they're approaching the 100 period moving average and the zone we talked about last night. This is a good zone. Look where they are on the weekly chart. This week's close will be very, very important. Do they fight back by Friday's close to open back above the 20-week moving average, or do they close the week below and continue lower or snap back anyway? We don't know the answer to any of that. I'm not trying to project anything. I'm just saying the 20-week moving average is important, and I am watching the close this week. On its face, it's a negative. Obviously, they can snap back at any point. Just on its face, taking the market at face value, being an umpire calling balls and strikes, you have to say closing the week on the first hit below the 20-week moving average without even a reaction off of it, that's negative. While we're on the weekly, XLF coming into its 20-week moving average. It's funny how this works with home base. Market, any market, XLF, SPY, QQQ, it doesn't make any difference. They get far and extended away from home base. What do? Eventually, they're coming back to home base. We've been talking about this for years, watching this for years. This is the next zone, 39.45 down to 38.97. XLF came up short of that the other day. The 39.45 is essentially a breakout area. So they're taking the luster off this. So if they came back down, made a new low, we'd be looking for that 100 period moving average. Trading 101, at least my way. Smash Mouth, numbers we talked about in Smash Mouth. Pretty sure we put these on the board last night. Look what happened today. Finished just about smack dab in the middle. Here's the intraday hourly reactionary stuff. Finishing the day in a bearish, flaggish kind of formation down here. These numbers were good today. They're not good tomorrow. They may provide support tomorrow. One of them may provide resistance. Either way, from a trading perspective, first time, best time, write that down. We talk about that every single day in the live room. First time, best time. Doesn't mean there's not played again Sam opportunities, but they're not all created equal. Still, first time, best time. Pretty far from the 20-week moving average yet. We'll see if they have to run this test down here on this run, on this move lower, in this particular corrective phase. Weekly close is really, really important. Have I mentioned that? Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.